Welcome to the Veronica Edwards Show, where we have fun financial conversations that everyone listening can apply to their personal and professional life. I'm your host, Veronica Edwards, CPA, and we are back, Season 5, 2025, completely independent. As always, I want to shout out the V team because we are transitioning now to being on YouTube as well as Buzzsprout. So we are asking everybody to subscribe and to watch the shows. We are hoping for 1,000 subscribers this season. We're up to a whopping 26, which I'm very excited about for every single person that's subscribing. But still, don't forget about veronicaedwards.buzzsprout.com. That's where you can listen to all the prior shows, and it's just audio only. And you can listen to the current shows there as well. So today I'm excited for our segment CPA Tax Chat with our fellow amazing CPA, Ms. Alānna Anthony, who is the powerhouse behind Amplify Accounting and Consulting. Alānna is a seasoned CPA, tax advisor, financial educator, and brings over 20 years of experience. So I would like to welcome back, and first time on video this season, Ms. Alānna Anthony. Welcome.
Thank you. Thanks for having me.
Absolutely. Now, we are recording this on Earth Day, a week after April the 15th. This won't air until July. So, Alānna, how are you post tax season?
I am thankful it's over. I mean, I have a few extensions, and I actually have some new people coming in for taxes, which is interesting after the season's over, but that's okay. But I'm just happy that like the rush is over because for some reason people think taxes are an emergency.
Yes,
taxes are
we
never an
do.
emergency.
We get and that brings us to our topic today, because people get very nervous about tax season, but I feel like they get even more nervous when they owe money. So today we're going to talk about quarterly estimated taxes, because as we mentioned, this is going to air in July. So by this point, everyone should have either filed their taxes, filed an extension, hopefully they did something up until this point. But now it's getting to that point where you're going to have to make some payments. So today, Alānna, I would love if you can break down for us what's quarterly taxes, how does it calculate it, when are they due, who pays, and what happens if you do not pay. Because Alānna and I were just chatting. I owe a significant amount this year, Miss Anthony. So I said, let me book an appointment with your firm so we can get this together before the end of the year and have a game plan. And that's what we're going to talk about also. So Alānna, as always, this is your show. When it comes to taxes, you're the expert. So please start us off with everything that we need to know about what is estimated taxes.
Okay, so basically the IRS requires that you file estimated taxes on a quarterly basis if you're going to owe more than $1,000. Now, there are a lot of business owners who don't.
Including
you're
me.
then you're upset at the end of the year when you owe thousands on thousands, because that is the total amount you owe based off of the income you made for the year. So with quarterly taxes, you literally can estimate either for the year, or a lot of times with business owners, because if you're a business owner, you know it's up and down. It's never the same. And so if you can just use the quarterly net profit that you made for the quarter, that means your books have to be together though. And if your book's not together, then you need to call Veronica. Then you can use that number to determine how much you need to pay for taxes for the quarter. And you can literally go onto the IRS website and go ahead and pay those taxes. And when you file your taxes, you're going to say, I've paid this much in taxes throughout the year, so that the IRS does not double charge you for the taxes you owe.
Let's talk about that double charge you. So I know we're going to be all over the place. I know I was saying maybe later in the show, we'll talk about what happens if you don't pay. So for example, we'll use me as a case study. I owe well over $5,000 to the IRS for 2024. Yes, I made some payments through my payroll because I'm also a W-2 for my business, and I'm also a W-2 for another organization. But we're talking Elaine, I probably paid 20% of what I probably should have paid in taxes. Am I penalized for not paying?
So you are penalized if you do not pay the full amount you owe by April 15th. They will hit you with a failure to file penalty. It's about 0.05%. It's very small percent, and you are charged that for each month that you go without paying. And then there's also interest. And right now the interest is a little high. And that's just due to inflation. Like I would say a couple years ago, I would say like, oh, the interest is not that high if you need a few months to work it out. Because the IRS will give you a payment plan. So if you don't have it, they'll allow you to sign up for a payment plan. But right now, the interest this quarter, as of right now, is 7%. Which
I was just going to say, I read some things that were 8, so 7. Yes.
It was 8 2 quarters ago. It was 8%, but it's gone down because of course the Fed reduced the rate, and so it went down 1%. But with everything going on, you never know if it's going to go up. So you want to just try to make sure you stay on top of it so that you're not continually having to pay interest on top of what you owe.
Very good point. And I know we're both business owners, but we're also employees. I think a lot of times people feel that they only have to pay estimated taxes if they have a certain type of job. Can you please tell us, is that true or not?
That's not true. That is not true because even, okay, we have our business owners, right? So both of us, we have to pay on the earnings we have. But then also you have to pay if you have, well, I'll just start with the high income earners. Just because a lot of people who are high income, they don't realize how much they are required to pay into the system. And a lot of times they have extra like Medicare that they have to pay in after you make a certain amount. And a lot of people don't realize that either. So high income earners, if you're not having enough withheld, if you get like RSUs, if you get bonuses, you need to make sure you're having the right amount withheld from your taxes or tax plan, of course. You know, I'm always going to throw that in there. Real estate owners, like if you have real estate, if you're an investor, so I'm not talking about if you own a house and you live in your house. That's different. If you own properties that you rent out, whether or not you have Airbnbs. So Airbnbs are a business. They're not even looked at the same way from the IRS perspective as a long-term rental. So whether or not you have an Airbnb or if you have a long-term rental, you have to pay taxes on that also, which is interesting because I actually had a client this year who has had rentals for years, but they turned 2 of them into Airbnbs this year. And they were shocked. And I was like, why are you shocked? You made a lot of money. You made more than you've ever paid. And you didn't consult with me first, so I can help you out.
Yes. So you brought up a good point because a lot of times I'm a very conservative investor and I say my long-term investment is going to be passive income through real estate. And I'm always going back and forth. Should it be at Airbnb or long-term rentals? It sounds like we're going to have to talk about that too. I didn't realize that there's different tax implications for that.
Definitely different tax implications because what happens is typically with an Airbnb, you're going to make a decent, like I seen over, like they made over, I want to say they made about a $40,000 increase in income year over year.
Oh, that's
from
big.
turning it from a long-term to an Airbnb. And so that is a significant amount of net profit. And granted, they did have more expenses because, you know, with Airbnbs, you may have cleaning and things like that and whatever fees that come out from accepting the payments. But you still have to pay taxes on that profit. And that profit was significant for them. They were shocked. And I was like, we should have had a conversation. I could have prepared you for this. We could have set up estimated taxes. We could have talked about some things you could have done that maybe, you know, sometimes we have plans for, especially when it comes to a property, you have plans for things that you may decide to either upgrade or you just need to get done. And that was something we could have discussed because maybe they needed to do that by the end of the year to help offset.
And I'm so
So it's
glad
just,
that you bring up tax planning. Like, I don't know why people, it's just like maintenance on your car. It's like, don't wait till it
yes.
breaks. Let's do the things along the way. And I was asking Alanna also, I'm a CPA, I have all this experience, but it's my first time in this predicament also. And I was asking Alanna, should I wait until October for us to talk? And you were like, no, let's still give ourselves some time the back half of the year. So we're actually meeting in May so we can plan and maybe get some things in place the last 6 to 7 months of the year.
Yes, because what happens is a lot of times people want to wait to the last minute, but some parts of tax planning, you need money. So
Yes.
that's why I tell people you want to meet earlier, because now hopefully you don't make I don't want to say bad decisions, but you might make a different decision based off of the plan for the year. So like one of my clients, he was like, I thought I had all this extra money. I bought a car. And I said, why'd you do that? You had extra money, but you still needed to pay taxes on that money. And again, I always say, reach out. Let's have a quick conversation, because I want to make
Mm-hmm.
sure that you're not in a shock when it's all said and done. Because sometimes I do their taxes and I'm shocked. I'm like, no, what did you do? What
Right.
happened
And
this
you
year?
brought up a vehicle, and there's tax deductions for vehicles depending on their weight and if it's used in
Mm-hmm.
business and the percentage you're using it. So, like you said,
Yes.
just a quick phone call to Miss Anthony. She'll have you straight.
Yeah. And he didn't buy that type of vehicle. So I was like, oh. I was like, oh, okay, you bought a vehicle. What kind? Then I was
Right. I
like,
could work with
no,
this.
no, I can't help you. Why'd you buy that vehicle?
Oh, man. And then, Alanna, we also have family members that are probably at that Social Security age. And I don't think people
Yes.
realize too. Can we talk a little bit about that? That some folks that have pensions and Social Security, they still have to pay estimated taxes as well, possibly.
I had that experience this season too. So, funny enough, I would say, and hopefully she don't mind, like my mother-in-law takes Social Security, and I always look at her numbers every year and I'm like, okay, whether or not it's taxable or not, okay, we're good.
Mhm.
Because that's the only thing she gets. But I had another client this year, he started taking Social Security. He also still works.
Mm,
He also gets a retirement pension,
come
and
on,
his
big
wife
baller.
works. Right, but his wife works. So when I called him, I said, "Hey, why are you not having taxes taken out of your Social Security?" And he said, "They told me I didn't have to." I said, "Who told you that?" He was like, "The people at Social Security." I said, "Did you tell them you have other income sources?" And he
Uh-oh.
was shocked, because that's the thing. People hear that Social Security is not taxable, and it's not
Yes.
if your total income is under 25,000, if you're single and or your head of household. But if you're married, is your total income has to be below 32,000. And a lot of people, I don't think
Mm.
about that, especially in this client's case. Like, he's one of those people, I don't know if he'll ever stop working. Uh, so
I know a couple of those. Yes.
yeah, so he's starting to take Social Security, but his wife is still working age, and his wife is one of those people who doesn't know really if she's going to retire either at 60. I think she said her age is 67 and a half, because she likes to be busy. So
Mhm.
those are things you got to consider, because that literally was the thing that made them owe this year, was the Social Security not having taxes taken out. But I've also had clients who they have Social Security and they have other income sources, but just due to the type of income source, then their Social Security ended up not being taxable. So those are things that you really should speak with your tax preparer, your CPA about beforehand, so you'll have an idea of where you'll stand and you won't be in shock. Because like I said, my client was in shock, and I felt bad for him. And they didn't owe too much, but it was still, they owed, and they thought they were going to
Mhm.
probably be. I always tell my clients, we like plus 100 minus 100.
Right.
That's what we
Right.
like.
Right. Right.
And they thought they were going to be like, okay, maybe minus 100, but not minus, almost four figures. So
Ooh, I understand that. So now the next thing, Alanna, if we could just talk about how do we calculate the amount? You mentioned net profit, so revenue minus expenses. But what about for people that don't have a business? Like, how do we calculate it, and how often? What time of the quarter are these payments due?
So, if you don't have a business, you literally can just use your W 2. And I will also say the IRS has an amazing, when I say amazing, calculator that you can use.
What?
But yeah, they have a withholding calculator that you can use. But the withholding calculator, it'll tell you what you need to adjust. But what it also tells you, and this is what people kind of like, they just brush past it, it'll tell you what your liability will be or if you're going to get a refund. And that's the important piece that people like brush past. So you use your total income, so everything that you expect to get for the year. You subtract out your deduction. So whether or not you're going to take a standard deduction, or if you're going to take itemized, then you'll need all the things you plan to itemize with. And remember, take the higher, because some people, they want to itemize, but the itemize is not the higher deduction. And we want this to work out in your favor. We don't want to pay more taxes. We want to pay less. And then
Correct.
from there, once you get your total tax, your total income, basically what's going to be taxable, you want to subtract out. You want to multiply the percentage. So a lot of times the percentage is on your previous tax return. Now, if you had something significant happen, I want you to go to the calculator. But if you're doing the
Yes.
rough back of the napkin, you can easily look at your percentage. Most people, unless you're a very high income earner, most people are somewhere between 10 and I would say 15%. If you're a high income earner, it can go higher, it can go all the way up to 37%. But you'll want to calculate how much you are going to owe for the year, and then where you fall currently. And you can easily look at your latest not tax stub, but your latest pay stub to see that. But the easy way is just to go to the IRS calculator, and it literally will guide you through it. It'll ask you how you're going to file. It'll ask you what was your last paycheck date and how much you got paid. It'll ask you the year-to-date numbers, and it'll ask, do you expect to have a change, or do you expect to have any deductions? Do you have another job? So I tell people, oh, I want to bring this up right now. If you have more than one job, please go to that calculator, because I've had a few of those this season, and that has really been a thing where you have more than one job and your second job is not taking out enough, because all they know about is that job. They don't know you have another job. And don't say, I told the people I have another job. Tax-wise, they do not know you have another job.
It does
So
not exist if it's not on your W-4.
yes, exactly. So, but the tax calculator or the withholding calculator will tell you exactly how much you should have withheld. It'll tell you where you're going to fall. Like if you keep with this same job, nothing changes, you'll get a refund of this amount. If you keep with this same job, nothing changes, you're going to have to pay this amount. Here's how you change your W-4. They'll literally print out a W-4 for you. It is very simple. It's
What?
very
And this
easy.
is free, Alanna?
It's free. It's free.
Girl,
It's my
nobody talks
favorite
about
tool.
this.
Yeah, it's
I'm
my
using
favorite
it.
tool. Yeah.
I'm looking
I
this up as
literally
soon as
just
we
had
get
to use
off.
it for my husband, because my husband has a per diem job in addition to his full-time job. And I looked at his withholdings. I just looked at his withholdings. I said, oh, you didn't withhold enough.
Ooh,
That
yes.
I could see it, because when you do taxes, you can see it. I look at
Yeah.
somebody's stuff and I'm like, please tell me you have something else. Please tell me you have something that you
Something
contributed.
we can deduct from this, a
Or
child.
I'm looking at box 12, like, please tell me you contributed to a 401k or something, because that is what's going to help you be able to offset that taxable income. So,
Ooh, Alanna, you're giving so many gems today. And I know we're getting towards the end of the show already. I would love for you to talk about, what do we do now that we realize, okay, we're in July, we haven't paid anything. You mentioned we can go to the calculator, but what happens? You mentioned some of the penalties for not filing, the penalties for paying late, just all the stuff. Like if somebody is completely just like listening and says, I don't even know where to begin, I don't necessarily can afford an accountant to help me, what recommendations do you want to leave folks with that can help them with kind of this daunting task? People get very nervous about having to pay the IRS.
Yeah, even if you can't afford an accountant, I would say take a moment, go through your books, especially if you're a business owner, you haven't paid anything into the system. Go through your books, make sure all your expenses are in there for the past 6 months. Make sure you have all your income recorded. From there, you should know whether or not you have a net profit or net loss. Now, if you have a net profit, you're going to need to pay some taxes into the system. Now, you may have other situations like kids and things like that. You may have daycare, you may have camps and stuff that offset. But I always tell people it's somewhat better to have an idea where you fall first, and then from there you can look at your other deductions. But if that scares you, just look at, do I have a net profit? And then from there, you can literally take a percentage. Look at your last tax return. I'm going to just tell you to look at your last tax return, because to estimate, I'd rather you be conservative and look at your last tax return than to say, I'm just going to send $400. Because I don't want you to be in a bad state. Whatever that percentage is on your last tax return, let's just say 10%. Let's say if you have a net profit of $10,000, I'm just using round numbers just to make it easy. Then you need to multiply that by the 10%. That's $1,000. You can literally log on to irs.gov/account and pay the $1,000 for estimated taxes. It's called a 1040 ES. So you tell them you're making a payment for that.
So, Alānna, one thing I wanted to add too, there's self-employment tax for some folks. So that's 15.3%. And then we have income tax that starts at 10, and you mentioned goes all the way up to 37. So I do get a lot of clients from time to time that don't realize, like, oh, you get this special bonus of being a business owner if you're not taxed as an S Corp or a C Corp, that you have to pay the 15.3 plus the income tax. So with that 10,000, it might be closer to 2,500 or $3,000 that you might have to pay, correct?
Correct, because when you are a business owner, what people don't realize as employees, you just pay half of that. You pay 7.5%, your employer pays 7.5%. As a business owner, especially if you're not an S Corp, you are going to pay the full amount, because you still have to pay into Medicare and Social Security. And so you have to pay that full amount so that they know, so that you have money when you actually retire. Because if you're not paying into Social Security, there's not going to be any money for you. Yes. I'm just letting you know.
And we know people have said for decades, oh, we're not going to have Social Security. Well, everyone who said that, they're reaping the benefits of Social Security. So I believe
right now
that these old institutions, it will take some time for them to break that down. So I do feel you're right. The good thing is you can be a business owner and people say, well, I don't pay into Social Security, I'm self-employed. You do. You just don't realize it. And to your point, Alānna, you're paying the employer and the employee. And if you're a business owner, you are that same person. So in essence, you are paying both, but at least you can spread it through a payroll if you're an S Corp. And I'm taxed as an S Corp. I don't necessarily recommend small business owners, Alānna, to be C Corps, but that could be another topic we talk about.
Yeah, I don't either, though.
Yeah, a lot of double taxation that we could talk about. But Alānna, we are already to the end of the show. So I just want to do a quick recap that if folks are expecting to owe more than $1,000, you need to pay estimated taxes. If you are owing more than that and you feel like you're a little overwhelmed, you can set up a payment plan. You can go on the website, you can call the IRS. You always recommend to keep your prior tax returns, this great IRS tax calculator you mentioned. So we can just Google that, Alānna, and it'll pop up.
Yes, or even if you just go to irs.gov and you go to individuals, that calculator should be listed there. It's a very popular tool with the IRS.
Oh, I love that. Well, Alānna, can you please share with the listeners how they can reach out to you for tax planning if you have availability, and ways that we can follow you on social media, your website, all that fun stuff?
Yes, so you can reach out to me. Well, you can find me everywhere under Amplify AC. So on social media, that's where I'm listed. On Facebook is Amplify Accounting consultant, of course. My website is www.amplifyac.com. I do have a link there where you can jump on my calendar and we can discuss tax planning. I'm telling you, you want to start it early, because after December 31st, the only thing you can do is contribute to retirement. And you're going to need thousands to create the deficit you need. I like people to know. They're like, oh, how much can I contribute? You need thousands on thousands. And I mean multiples. So.
Yes. And you're right. I just want to add to, with people feeling like, oh, well, I have time at the end of the quarter. Usually your cash is a little tight at the end of the year with Christmas and Thanksgiving and going into the new year, or wanting to buy that vehicle. So it is good now while it's still fresh and it's the summer before back to school, all of those different things that you can start saving. So thank you so much, Miss Anthony.
You're welcome. I do want to say one thing.
Yes.
If with tax planning, also, a lot of people think about spending more money, which you don't really see a return on. There are ways you can make money. So you put money in to bring money, take money out, basically an investment. So just think about that. Like, we want the business to make more money. We don't necessarily want to be in a place where we're always spending and we don't see a full return.
I love the way you ended that. So thank you again, Miss Anthony, for co-hosting with me today. And if anyone has any tax-related questions, you can definitely reach out to Miss Anthony. We'll have all her information below. And again, V-Team, you can listen to all the prior shows on veronicaedwards.buzzsprout.com or balancevirtually.com, or you can go to our YouTube channel for The Veronica Edwards Show. And until next time, stay balanced and financially savvy.